minutes left in regular trading. We are seeing a surge in equity markets right across North America. The Dow now up 229 points, also up 1% on the week, and the S&P TSX now up 112 points, but still down about 1.15% on the week.
And one of the things that is causing the market to surge late in the day is Fed Vice Chairman Janet Yellen said that a third round of large-scale security purchases may become warranted and necessary to boost the U.S. economy. So it's an unusual situation where she is saying, look, the economy is actually a lot worse than you think. However, we may be willing to take drastic action to get the economy moving. The markets rather like to hear that. To talk about what's been happening in the markets today, our next guest is Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. Diana, very good to have you here with us.
Thank you.
So what do you think of this mention by the Vice Chair of the Fed, Janet Yellen, saying that, look, we may do another round of basically quantitative easing? Is that what's popping the markets this afternoon?
Markets have started out the day out of the gate very, very strong, and I think that this is just adding fuel to the fire for sure. We heard that from another Fed speaker yesterday, and that sort of rallied markets as well. But we're positive on the market, so I just want to put that out front. But just want to say one thing. Yesterday, for example, we're so hostage to headlines. The volatility is huge. You were saying the S&P is up 1% this week, and yet the volatility index, the VIX, is up from 28 to 34. I'm not sure exactly this moment where it is, but that's where it was earlier today. So volatility has gone up. The VIX has gone up, which is normally a measure of fear. Usually goes up when markets go down. But in this case, the volatility index goes up when the market goes up. Yesterday, I counted no less than 16 European headlines that hit the tape on the EFSF and how they're going to bail out or what they're going to do with it. And of those 16, 7 were positive and 9 were negative. So we're firmly in the hands of politicians and speeches and headlines, and we're ahead of a summit, and Canadian cash volumes are light. Volumes are a little light, although in the U.S. it's heavy. But the market does show signs of better health these days.
Diana, as you said, we're hostage to headlines, and by that you mean European headlines. Do you have any sense or belief that next week we're going to get some more positive headlines from Europe as a result of these dual summits that run all the way until next Wednesday?
Right. We don't know. They clearly are running on their own schedule, and some market participants would have liked them to be a little clearer and faster, as we've seen as how the market has traded. But I guess the psychology has changed a week or two ago when it was understood that things are going to be okay, that there's going to be some sort of bailout, that there's going to be some sort of Greek resolution. We just don't know when and what exactly are the details. But before we felt that way, markets didn't act well at all. And I think that's what probably triggered the first leg of the stabilization in the market. But another thing which people are not talking about it too much is the fact that the North American economic data has been getting marginally better for the last month and a half. We've just been so busy watching the European political saga that maybe that kind of slipped under the radar, but the data is getting a little better.
Yeah, we've noticed that as well. Let me ask you, Diana, what's the volume been like right now? I mean, are we seeing people getting back in, or what are you seeing?
Yeah, the volumes in the U.S. And Canada at the beginning of the week were fairly light, and I'm talking about cash desk. Cash desk is where people go out to buy their stocks, and not so much the derivatives, the ETFs, the commodity futures, that sort of thing. So those have been kind of quiet. Of those trades that we have been seeing on the cash desk, we have seen mostly large cap buying. So I think we're seeing a little bit of global interest coming back into Canadian energy and commodity stocks as things are getting a little better, as commodity markets are getting a little bit more traction, but mainly in large cap liquid stocks. That is the first step in the reparation of any market. It usually comes back in the liquid stocks. The volumes we have seen in the derivatives markets, futures and ETF, I think that with correlations, equity correlations where they are, people are still comfortable getting exposure through a one larger sweeping trade such as an ETF or a future.
Diana, we don't have a lot of time left, but what sectors do you like right now?
You know, we still believe that yield and its various forms, and in the yield sector, there's various risk levels as well. You can go from a very low risk yield asset to a high yield asset. So as risk comes back on, you might want to stay in this sector and just increase the level of risks through different securities and different asset classes, even high yield bonds.
Okay, Diana, we'll have to leave it there. Thanks very much for joining us today.
Thank you, pleasure.
That was Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital.
Stay with us. When we come back, we've got a preview of what's coming up on the close. We'll be right back.